Before buying an ETF alternative to short-term Treasury bills, it is important to check the total returns over time for that ETF. They can be found at morningstar.com, which is accessible to non-subscribers for that kind of performance information. Just enter the symbol at the top left box and click the Performance tab. The total returns on an annual basis and over certain periods of time are set out there. For periods over 1 year, the returns are annual average total returns. Total returns include investing the dividends. An adjustment to the total return numbers need to be made to account for inflation and taxes that may be owed if bought in a taxable account. I only do this mentally. I know about what inflation has been over a period of time, and I know my marginal tax rate. So I don't actually do a precise calculation, but just one that I can feel comfortable relying upon. I know that the real returns of bond ETFs prior to a tax adjustment have been negative over a long period of time. Treasury bills as an alternative to buying a short-term Treasury ETF can be bought at auctions using non-competitive bids. Treasury bills are sold at a discount to par value, and the price difference between the par value and the price paid is the interest amount. Treasury bills mature in 1 year or less. They are auctioned every week for the 1, 2, 3, 4, and 6 month Treasury bills. The 1 year Treasury bill is auctioned monthly. The discount is set by competitive bid made by large brokerage firms and other institutions that are made at auction. The Treasury accepts all non-competitive bids, and both the competitive and non-competitive bids receive the same discount. The discount, as I said, is the interest amount. There are 2 ways to buy Treasuries at auction digitally, and the first method, which I use, is to simply enter an order to buy in one of the 3 brokerage accounts that I have where no commission is charged by the broker. Those brokers are Fidelity, Vanguard, and Schwab. I discuss my purchases of Treasury bills in my blog. The purchases occur almost every week of the year. When purchased using a brokerage account, the par value of the bond will be $1,000. That is the amount that will be paid at maturity, the principal amount of the bond. So entering an order to buy 10 would be for $10,000 in principal amount. Before buying using a broker, it is important to determine whether the broker is going to charge you a commission. Some brokers do that. I would not use a broker that charges me a commission when I can use another broker that does not charge me. I mentioned in a comment yesterday that the total return for the bond ETF that owns short-term treasuries, which has a symbol SHV, had a 0.82% total return, which includes dividends reinvestment, over the past 15 years. And that number would be deeply negative on a real return basis without calculating the actual negative return number. It is apparent that that would be the case. The other way to purchase treasuries is to establish an account at Treasury Direct, and which will require you to link a bank account that will be used to fund the purchases and to receive the proceeds from the Treasury when the bond or bill is redeemed by the Treasury. When the purchase is made, the buyer has the option to set up automatic investments in the Treasury direct account. When the amount purchased is up to the buyer, the minimum order is $100, and each incremental amount has to be in $100 amounts. But in that case, you could enter an order to buy $600 in principal amount of a Treasury bill or Treasury note or Treasury bond, and not have to buy the full principal amount, which is $1,000 when you buy through a broker, which is what I do. I mentioned that the interest for a T-bill is represented by the discount, the difference between par value and the amount paid for the bill. When the Treasury reports the results, it specifies both the higher rate and an investment rate. The higher rate uses 360 days in its calculation, while the investment rate uses 365 days. That results in the investment rate being slightly higher. I use the investment rate when determining what my interest rate is on the bill. The 3 and 6 month bills are auctioned every Monday, which is not a holiday. The next auction will be on January 16th, 24, since Monday is a federal holiday. The 4 month bill is auctioned on Wednesday, and the 1 and 2 month bills are auctioned on Thursday. There are cutoff times for entering an order to buy at an auction. The auction price will be very close to where the bill is trading in the secondary market just prior to the auction, and you can check those prices at any financial website like MarketWatch. As of last Friday, which was January 12, 2024, the interest rates on Treasury bills trend down as the maturity goes from 1 month to 1 year. That reflects a consensus opinion that the Fed will be cutting the federal funds rate as the year progresses. The highest yield now throughout the maturity spectrum is which is 1 month to 30 years, is the 1 month Treasury bill. And the second highest yielding bill is the 2 month bill. In my opinion, the bond ghouls are pricing a 0.25% cut, 25 basis points in the federal funds rate, and the term starting with the 4 month and ending with the 6 month term. The 6 month bill closed last Friday with a yield 39 basis points, that is 0.39%, below the 1 month and 21 basis points below the 4 month.